Hello guys. So here we are with our next topic. Now, after identifying, analyzing, and recording of journal entries, we have to make the trial balance. In trial balance, we will be looking at the following things. Okay. Read this. Like list each account title and its amount from ledger. As we have made the T account heads previously in the trial balance. If an account is a zero balance, list it with a zero in the normal balance account. Okay. Or you can omit it entirely. But I would say list it with a zero count, zero amount. Okay. Compute the total of debit balances and the total of credit balances. Verify total debit balance is equal to total credit balance. As I said, debit is always equal to credit. If these both are not getting equal, then definitely you have made the mistake previously while recording the transactions. Okay, then you will need to look back and find those mistakes here. As we have discussed the previous entries, we have made the T accounts, and for that we have made the trial balance. What is the format of trial balance? First of all, at the top you will be writing the name of company fast forward. Afterwards, the name of report. It's a trial balance report, so trial balance. After that, you are gonna write the time for the time period, December 31st, 2017. It means it is for the period of December from 1st January 2017 to December 31, 2017. So the total, like we can see, debit is equal to credit. It means we have done everything good because debit balance is equal to credit balance. It means we have recorded the entries very correctly. Searching for errors. If you have made the errors in the trial balance, how you can search for them? If the trial balance does not balance, the errors must be found and corrected. First of all, make sure the trial balance columns are correctly added. It means if you have made the T accounts, check if you have added all the T accounts in the trial balance. Make sure account balances are correctly entered from the ledger. From the ledger, account balances are correctly embedded in the trial balance. See if debit or credit accounts are mistakenly placed on the trial balance. Okay. Recompute each account balance in the ledger. Verify that each general entry is posted correctly. Verify that each original journal entry has equal debit amount. Okay. If you find that every entry's debit and credit is equal, then your debit balance should also be equal to credit balance. Once the trial balance is met, we are gonna prepare financial statements from these business transactions. There are three kind of financial statements which we are gonna look into this. As there are five. Okay. First is income statement. Which is at the point of time. It means we are showing the financial condition of the business at a specific point. Second is balance sheet, which is also known as the statement of a financial position. Okay, so which is for the period of time. Period of time means it is for 1 year or quarter. Okay. Third is cash flow statement. Okay, statement of retained earnings. We are gonna see it in the next few slides. This is here. As I explained, point in time, income statement, period of time, okay, point in time. So the four financial statements and their purposes are, guys, I have, yeah, balance sheet is at the point of time, income statement is for the period of time. You have to see this thing, okay? Now, financial statements. The four financial statements and their purposes are income statement reports revenues less expenses along with the resulting net income loss. In income statement, we shows revenue minus expenses. Statement of owner's equity. From that income statement, the loss figure, net profit, goes into the owner's equity part. Okay. Then from that statement of owner's equity and balance goes to the balance sheet. Balance sheet reports the financial position. It reports assets is equal to liabilities plus owner's equity. Okay. Then statement of cash flow. This statement shows how much cash is with company. Like maybe company has very high amount of assets, but its cash balance is not that good because they are working more on credit basis. So this is income statement, revenues minus expenses, net income. From here, the net income will go to the look at this. From here, the income net income figure goes to the statement of owner's equity. Total capital invested zero. Investment by owner 30,000. Okay. Net income. This came from here. As this is gonna be the part of owner's equity 3,395. Total is 33,395 less withdrawals by owner. So this 33,195 will go to the balance sheet amount of owner's equity. Here you can see balance sheet assets, liabilities, equity, and this came from the statement of owner's equity. This is how the statements are related. Now the presentation issues. Dollar signs are not used in journals and ledgers. You have to keep these in mind as this is like very much obvious. Dollar signs appear in financial statements and other reports such as trial balances. The usual practice is to put dollar signs beside only the first and last numbers in account. It which will show that all amounts are in dollar. And amounts are entered in the general ledger or trial balance. Commas are optional to indicate. Okay, commas are always used in financial statements. Company commonly. So prepare a trial balance. This is the example. You can take the amounts from here and make the trial balance. So these are the amounts given. This is the exercise for you guys. You have to make the trial balance. So what we have to see is total of debit and credit is equal. It means we are going very much right. We are doing right. Okay. Your trial balance is good. So this was all about financial accounting. Okay. If you have any issue in this and want to discuss with me, you can always discuss with me. Okay. Thank you guys. Take care.